I am pleased to call to the stage our panelists. The session will be moderated by Isabell Moessler, founder and CEO of IMC Consult. She is joined by her panelists Ronit Ghose, Global Head of the Future of Finance at Citi Institute, Kash Razzaghi, Chief Commercial Officer at Circle, and Raj Timothy Nandwani, Global Head of Business Development and International Market Access at Binance. Let's give them a very warm welcome.
Thank you so much. Hi, everyone. Good morning. And I'm really pleased to kick this off, this session today. Our topic for this morning is Adoption Unlocked and making digital money work for everyone. My name is Isabell Moessler. I'm founder and CEO of IMC Consult and SpireBay Financial. And I'm delighted to welcome my panel here. Huge level of knowledge in this whole space. We were joking in terms of the preparation, how long is this and what can we cover? But why don't I hand over to you first for everybody to introduce themselves, and then we'll kick off with the topic.
Great. Thanks for having me back. It's brilliant to be in this venue again for several years running. My name is Ronit, and I run a think tank for Citi called Future of Finance. Does what it suggests in the name. We advise clients, Citi clients, central banks, financial institutions, corporates, private individuals on what the future of money looks like, the future of payments, including stablecoins and digital assets. Prior to this role, I ran global financial research at Citi, which I did for 12 years, currently based in Dubai.
Thank you.
Yes, hello everyone. My name is Kash Razzaghi. I'm the Chief Commercial Officer at Circle. Circle is building a full-stack internet financial platform with a goal of bringing money on chain. We're best known for being the issuer of USDC, the largest regulated stablecoin in the world. Great to be here.
Thank you, Kash. Last but not least.
Good morning, everyone. My name is Raj Nandwani. I don't think Binance needs any introduction. I think when you think crypto, we're the first probably ones that come to mind, saying that in front of some of the giants in the space as well. And really what we're here to do is bridge public and private sectors to solve some of the most challenging questions and initiatives in the space to really drive adoption.
Thank you so much. So, like I said, diving straight in, and because in our title it says digital money, but what do we actually mean when we say digital money? What problem are we trying to solve? Is it payments? Is it trust? Is it something else? I'd love to hear your thoughts. Ronit, why don't you kick us off?
Absolutely. Digital money, what does digital money mean? That means money for the age of the electronic world and specifically the internet world. I think for this audience, digital money means digital asset money, and I'll come back to that in a second. But let's just zoom out. What is money? Money is a store of value, a means of account, and a means of payment. And money has historically been, for most of human civilization, for the 5,000 years of written civilization, precious metals, silver coins, gold coins, bronze coins. In the electronic age, starting in the 50s and 60s, finance got transformed. And Citi, in the 60s, was one of the first banks to really push digital. We can't claim we were the first to push digital assets, and I'll come back to that in a second, but digital. We basically took what existed offline in classic banking books and put it online, starting in the late 50s, early 60s in centralized databases, mainframe servers, mainframe computers, all the way through the 80s and 90s, moving to electronic banking, internet banking, and now in the last 15 years, digital asset banking. Different digital banking or digital finance and digital money and digital asset is digital money is still account-based. Digital asset money is wallet-based or token-based. And what we're going to build in partnership with a few people on the stage here and collaboration with is a combination of the two, a hybridization of the two.
Very comprehensive. Kash, anything to add, or what's your point of view?
To me, one of the main components of digital money is interoperability. and what it would provide the world. And we've been talking about this. If you look back over the last 50 years, nearly every industry imaginable has been upended by the internet and made better. It's the user experience has been made better. The value add across every industry because of the internet has been made better, except for money movement. And so one of the appealing aspects of digital assets is that it is interoperable. I can send money to any wallet around the world on blockchain without intermediaries, without fees. Or without exorbitant fees, rather. And so that's the component that's really interesting to us about the appeal of digital assets, the interoperability, so you can actually remove borders, and that's the advantage we see.
And Raj, also from your point of view, which one do you think actually matters for the adoption, or in terms of the definition digital asset?
I actually don't think the underlying asset matters too much, right? Like if we go back to what money really is, right? It's the ability for people to save. It's the ability for people to spend. It's the ability for people to earn, right? Regardless if you're doing it in stablecoins or in fiat in whatever country you might have, right? I think really what matters is distribution and access, right? And obviously, the likes of Circle have done that incredibly well. We like to think we're helping facilitate that with the firm. Citi freaking invented the ATM machine, right? Like brought access of money to everybody, right? If you think about it back in the day. And so the way we view it from Binance's perspective is how can we make whatever you define as money, right? Whether it's US dollars, whether it's stable coins, whether it's crypto, right? In all its different forms, whether it's tokenized gold, right? Asset doesn't matter. It's how can we get that to the hands of people, and how can they easily utilize that in whatever form they want, right? And so we think distribution is actually what matters.
We wanted controversy. So here's the first. I think the asset does matter. You need to make sure that the asset is real. The asset is trusted. The asset isn't going to blow up. And at Circle, we've invested billions of dollars in terms of how we manage our assets and ensure that USDC is always backed 1-to-1. And so I understand the premise that without distribution, the asset is not usable. But at the core, you need to be able to trust it. You need to be able to, really believe in it, and others need to be able to be willing to engage with you for that asset. Otherwise, we're just trading Pokemon cards. And so I think the asset actually absolutely does matter.
You heard it here first. Kash Circle, crypto is basically Pokemon cards.
I didn't say that.
He didn't say that. I put words in his house.
Everything but USDC.
See,
Sorry, I took over the panel there.
No. Go for it. This is, and we also agreed. Like, this is a conversation. This is really not just me firing questions at you, but and it's interesting on the adoption piece. It is the trust. It really is the everything else is sort of fades into the background, because I want to be sure that when we transact in whichever means, I get the expected outcome. So I can really see that. But let's stick with this for a moment. So what does adoption really mean? And Ronit, you've studied the evolution of money. You wrote a book about it. And so what is your kind of benchmark? When would you say we're there? When is this a thing? And we can
Thank you for the plug for the book, and thank you for the ATM plug as well. There are two other banks that claim it, but we're claiming that. Any friends from Barclays, I'm sorry. We claim it. Adoption. In the UK, Barclays claims that they invented the ATM. So it depends on how you define an ATM. So anyway, but do you know the slogan, City never sleeps, the Frank Sinatra song, right? Yeah. New York, City never sleeps. The reason we had that as our marketing slogan, as in CITI, City never sleeps, is because of the ATM.
Oh, wow.
Because before the ATM, the bank would go to sleep. Exactly. So if you went to the bank at 3 o'clock in the afternoon or 4 o'clock in New York City or London, the bank was shut. ATM starts, proto-ATMs, early 60s. By late 60s, you have fully functional ATMs, and the bank is 24/7. And that's only that's a long time ago, but that was our grandparents' era. Before then, banks were shut. Banks went 24/7. Domestically, finance is 24/7 on real time. I going to spend a couple of nights in Davos, but last night I was in Zurich. On the train up to somewhere around Landquat, I was basically paying bills back in Dubai, real time for my banking apps. Probably security experts will tell me I shouldn't have done that, but I was overdue on a few bills, and I was doing it literally on a toy train coming up from Landquat to Davos this morning, settling bills. So adoption of digital money in the kind of free blockchain world is so prevalent domestically. What's really exciting about stablecoins is there are still niches where there's a gap to be filled. Digital asset money, stablecoins. The big one is cross-border. So if I'm sending money Dubai to Jakarta, Dubai to Cairo, Dubai to Mogadishu, it doesn't go in the 1 hour it takes when I send money Dubai to London. They could say even 1 hour is too long, but 1 hour is good enough. But it takes weeks on certain corridors. And obviously the charges on those corridors are pretty high. So there are lots of incomplete areas where stablecoins and digital assets will help. There's also domestically an opportunity to create another rail. So I think there's going to be adoption in many parts of the world. If you look at the US stats, the number of people who either touch crypto, hold crypto, or have exposure to crypto is already in the tens of millions. In many what we used to call emerging markets, I think that term is still relevant, there is high adoption. If you look at certain demographics, if you're in Indonesia, the average person in Indonesia is more likely to hold crypto than equities. Now, that's not true in the US, where the average person is in his 40s, and the average investor is in his 60s or 70s, they hold equities. But in Indonesia, where the average person's in his 20s, for a 20-year-old, these people are crypto native, just like they're iPhone native. So adoption varies depending on the demographic, the country, the region you're in.
Exactly. And Raj, maybe I can pass that to you because you operate in jurisdictions also where it's not a nice to have and where, you don't have to explain the use case. And we all get that question, yeah, but why would I use it? And I loved your example because, again, that shows the adoption when the mechanics move into the background. You have a need, you needed to pay the bills, off you go. And I guess you see this quite a lot where it's not an add-on to the existing banking payment system.
Yeah, there's this great slogan for crypto, which is crypto is useless until you need it, right? And so, again, coming from a Binance lens, we've seen a lot of situations around the world where the only last resort was for people to use crypto, right? The Ukrainian refugee crisis was one of them, right? When people were literally crossing border, right, to get out of the jurisdiction where they had all of their assets tied, right? What we did was we issued virtual debit cards linked to their crypto wallets, right? On any asset, not just USDC, right? And so, sure, if someone was holding a meme coin, you can say whatever you want to say about whether there's intrinsic value or not. But they were able to convert that meme coin into real dollar and suddenly cross border with their bank and assets on hand without having to worry about how they would feed their kids the next day, right? That is actual use case. In the Philippines, what we've seen is that you could be sitting in a remote island, right, and be earning US dollar equivalent in USDC, working for a Turkish company or working for a European firm without ever having to leave the 1 square radius of where you were born, right? That is actual necessity. So, it's sometimes in crypto, we love to use jargon, right? Like we love to say, oh, we're changing the world and we're doing all that stuff. But we forget actually there's a reality on the ground where this is not even necessity. It's all they know, right? And it's actually bringing them up that curve.
Yeah. And Kash, stablecoins, we have to bring that into the conversation.
Yeah, I mean, here's what I would say about adoption. We're here in Davos, and everyone is going to meet hundreds, if not thousands, of people. And you're gonna, what are you gonna do? You're gonna connect. You're gonna connect with WhatsApp, LinkedIn, Telegram, email, and you're standing next to this person that you're gonna connect with. And your expectation is that as soon as you connect, it reaches that person with that second. And if it doesn't, you're looking around for the Wi-Fi signal. What's going on? That will be the same expectation you have for money. Your expectation will be that when you send money, it lands instantly. And when you send money, the cost of sending that money is going to be close to zero. that's when adoption will happen. That expectation isn't real around the world yet. In some areas around the world it is, but when we send large wires overseas, your expectations that it might take a couple of days. And if it's a large amount, you're going to get on a Zoom call and watch that other person receive it. Is it there? Is it there? Yeah, it's there. That is when adoption is going to happen, when all that goes away, and it's going to land instantly, and stablecoins is the vehicle in which we believe is going to make that happen.
Yeah, and maybe I'll add one thing there, right?
Please.
I think true adoption happens when you probably don't even know you're using the technology, right? So if you think about like my grandma watching YouTube videos today, she doesn't know she's watching on .mp4 or AVI, right? She doesn't, like, similar to crypto in the next 10 years. You won't know if you're transacting on Sol, BNB, or ETH, right? But I think one key point that we're missing out here is also ownership, right? Again, in the room, I don't know who's ever had their bank accounts frozen for no reason, who's had blocks on their transactions, who've wanted to send money out and had questions being like, why are you sending this? What is the purpose of the, what's the source of funds? What's the purpose of this? Now, if you're just a normal citizen trying to transact, right? If you can't call up and get your money out in 30 seconds, it's not your money,
Yeah.
right? It's probably the bank's one. It's probably Citi, right? And they never sleep when they take your money. So it's one of those things that I think over time,
you were warming me up, right, with the ATM gag. Yeah, then
you realize that we could
in and then
you also
if you've withdrawn more than your daily limit, Citi's asleep. We won't give it to you.
Get back on message, guys.
Well, it's absolutely true in terms of when it moves into the background, and you said you don't know, and to a certain extent you don't care. I always have the analogy with my phone. I use it all day, every day. Do I really know how the operating system works? No. Am I interested? No. And I think sometimes we within the industry kind of need to get over ourselves. Less jargon, less, oh my God, isn't it amazing? Because I don't know, some normies, maybe not. But anyway, let's have a look at the hurdles of adoption. What do we think is holding it back? Is it our jargon or decentralization? It's one of the key cornerstones, but does that confuse users, or what do you see as some of the other aspects that are holding us back?
Yeah, certainly I think the jargon piece is important. And again, to Ronit's point earlier, it's just money movement. And the tools that are being built today around the world that make it easy for anyone to engage and participate, that's step one. But certainly the technology over the course of the last, let's say, 10 years wasn't ready to handle the kind of throughput that's needed for transactions per second. Now with blockchains that are really being built up around the world, we're at the precipice to really be able to handle this kind of scale. But the marketing, the language, the narrative on crypto, for a long time, crypto has been a bad word. And I think now it's turning the corner again. That's something we all need to do to make it more usable and for people to understand it.
I always say that all new technologies, whether it's crypto, the mobile phone, digital in general, all new technologies start with actually online payments. They start in what's I think euphemistically called high risk areas. That's what regulators or compliance officers would call it. High risk areas. We know what that is, right? It's crime, it's scams, it's pornography, it's and that's been true for the last 20, 30 years, probably been true for the human history. And because all new technologies start in high risk areas, the existing regulatory, political, and broader financial establishment looks at it and goes, well, and it takes some time to mature. Then there's some very specific things or challenges around adoption, what's stopping adoption. The point about, you raise a very good point, Raj, about money. Is it your money? Why have many of my friends had their accounts blocked? And not all of them are in crypto, by the way, but quite a few are. Why is that? Is it because the bank wakes up one day and goes, "Ooh, that'd be fun. Let's block an account"? No, because typically we are responding to regulations and rules. So as a society, we have a particular way of handling things. And a lot of this, if you're in the Western world, comes out of the good old USA. I'm going to put Kash on the spot here. So actually, a lot of these rules, why does money take time to move cross-border? It's not the technology. It's not the technology that's stopping. Even the existing pre-blockchain technologies, they're going to move slower than a centralized database in one country. That's going to move fast. It's going to move in nanoseconds. When I do a transaction in the UAE on Ani between two bank accounts, it goes like this. It's true of nearly all faster payment systems in the world. There's 80, 85 of these. When you go cross-border, yes, there's a technology issue, but it's not the technology issue that really slows it down. That makes it a matter of minutes, tens of minutes, or maybe a few hours. The reason it goes to days today for some transactions is the compliance and political and legal layer. Because money is not just money. Money is a political sentiment, and international transactions are largely dollar-based. And that's part of US power. And the US, for the last several decades, has chosen to use the dollar as part of their strategic arsenal. And one of the areas I think that could speed things up cross-border, including when we get more stablecoins and DeFi into TradFi, is actually getting that compliance bit more automated or semi-automated. It'll never be fully automated. If we can fix that bit, that is going to... Because just putting stablecoins, and I'm being slightly flippant here, saying just putting stablecoins, but adding stablecoins and DeFi to cross-border, it's not really going to speed things up that much. It'll help, but it won't. The main burden is going to be you're sending money cross-border. The bank's saying, where's it going? Why? Because we have to go to the regulators and we have to go and say, this is where it's going. This is why it's coming in. This is why I believe it's not. So this is a broader political with a question. How do we manage cross-border?
And you mentioned the regulator, and then of course we have to deal with so many different ones, and there's no common approach. And Kash, I'm totally going to put you on the spot and make you responsible for everything US focused. But is it a case of regulation? It could be both. It can put on the brakes, but it can also accelerate. We talk a lot about institutional adoption and how do we get big institutions involved. They need regulation. So what are your thoughts around that?
Yes, I mean, for the longest time, Circle and many of the preeminent institutions in crypto have been begging for regulation, and now that that's become more clear that's going to happen, now we're looking for consistency across regulators in the world. We want to make sure there's a clear framework where you actually can send money from one country to another country and regulators can keep up. And to Ronit's point, the compliance rules are very, very clear. And so that is something that once the Genius Act passed in the United States, the level of inbound demand that we have seen from every major financial institution went through the roof. And for many years, these institutions wouldn't return our calls. We'd go to conferences and want to meet with them. They wouldn't meet with us. And now the inbound demand from these institutions, simply because regulation has unlocked their ability to really dive in, is what's interesting. And so now, though, we need to make sure that the regulation is consistent. So you can actually, because money will be global, and the dollar, to your point, is global. And I think now it's the next level of regulation that'll be important.
Yeah, and this is where the power comes in, and we could spend a whole different panel on that. But we also say here, digital money works for everyone. Now that's a big claim. Right. What do you think? Who's currently excluded? How do we make sure we're addressing those pockets of population? Or probably for now, it's not even pockets. It's still the majority.
I think globally, and I like to focus on the emerging South, emerging markets in general, right? Because the developed markets, they've had multi-currency accounts for God knows how long, right? But we always like to focus on the number of people who are unbanked. I'm sure everyone in this room has heard that statement one time. Nobody talks about the amount of people who are unbrokered, right? Nobody talks about the people who don't have savings products, but have banks, right? Who have bank accounts, but don't actually have access
to anything that could probably take them out of their current situation, right? And push them upwards in that ladder, right? And so, when we look at our duty almost, right, as the largest crypto ecosystem in the world, right? And arguably the largest retail bank, if you want to call it that, right? With 300 million users direct. It's a simple vision, right? Which is to give people as much access as they can and to allow the education to be as democratized as possible, right? For them to at least experiment within a guardrailed environment, right? And within a regulatory framework and structure to allow them to actually have access to these different type of products, whether it's stable coins, whether it's investment products, whether it's savings products, earned products. I mean, I think we have like 100 billion staked on exchange of just yield product, right? Which I can almost guarantee you most of those people would not have had access to even a simple savings account, right? And so that's the view, right? It's not really about what we want to trade. We're not the arbiter of what to invest in. What we feel our duty is to give as much access as possible within the correct regulatory frameworks that we operate in across the world.
And the understanding, I think that's really important what you said there as well. People who wouldn't have considered themselves as investors, who are now like, oh, this is easy. Investing doesn't mean I need huge amounts of wealth, but I can really do this in my means. Right. Just in the last few minutes we have is what I would like to do is I say a statement and then get your reaction, please. So get ready and we just go across the room. So one thing that must change in the next 12 months to unlock adoption. Ronit.
I think ever increasing regulatory clarity. That's, as Kash said, what brings not just banks, but regular day-to-day institutions in, the commerce players, online and offline. And you can see this happening already. The Walmarts, the Googles, the Alibabas. I think that's going to be the driver. Regulation and non-bank corporates.
Better stories of this being used in real world and in saving people's lives and in providing opportunities that were never there before. Better narrative.
I will echo that 100%. I think people in crypto are poor storytellers. We get so caught up in jargon that we forget to just talk about what the use case is. Because if you talk about the use case, it's clear, right? We need this. We need it yesterday. And actually, it's not in the future. It's happening today, right? There's real use case. They're one of the best examples of it. We're one of the best examples.
We just need to bring people along too.
I mean, it's a plug. Yesterday, we announced that we're doing a 4-part docuseries with Grammy Award-winning musician Wyclef Jean. And Wyclef is going to be going into areas around the world, going into the communities to see how these people actually live with the current financial tools and how their lives will be improved with digital assets. So that's something that we're working on that will be coming out this summer.
Wow, watch this space. That's great. Next statement. Your take on the biggest myth about digital money.
You want me? Can I start?
Yeah,
That
please.
crypto invented it.
Sorry?
That crypto invented it.
The biggest myth of digital money. I think most people that say they have a digital asset strategy, they've got more work to do before they really understand what it means to leverage this technology and implement it into their business. There's been decades of legacy tech that is holding them back, and so I think there's a lot more work to do, and we're still in the early stages.
And I think you already outlined in your sort of opening statement, no, digital money, it's been there. Same to you.
Yeah, I'd echo what I said at the start about it's been around for 60 years. But the other thing I'd say is, going back to the point about storytelling, both my more crypto native friends on the panel, and we are friends, said storytelling. I think looking at it I've been in and out of the crypto ecosystem from the outside for 10 years now, 2015, 2016. A lot of storytelling is too focused on outliers. Now, those are great. Don't get me wrong. The Ukraine example, I keep hearing it in Davos. It's great, Actually, that's where we met last year. I was at a panel with one of you. No, it was someone else, but we were talking about Ukraine. It was Stella, not you. And those are great, but they're outliers. We got to bring it back to day. What's going to make my mom, who's in her 70s, in the suburbs of London, look at crypto and not call me each time she sees a BBC article saying crypto's a scam? She stopped doing that recently, by the way. But, what's going to make a lady in her late 70s in the suburbs of London say, yeah, this is useful. The Ukraine stuff's brilliant. Sending, my example before, I use it myself, sending money from Dubai to Mogadishu, whatever. But there's more of a mainstreaming thing here. And there's a role here. There's also, in terms of adoption, we talked about people, but without becoming too AI and trying to steal some of this AI stuff from the promenade, machine-to-machine payments, agentic. There's a role for tokens. So adoption's not going to be just my mom or my wife using tokens at the back of Amazon and not realizing it's a USDC or something else in the back of Amazon. It'll be actually my fridge ordering and paying with a token so that my fridge is stocked when I fly back to Dubai next week. It'll be that.
Excellent. We will compare next year. We will compare notes. So
we're talking about...
And on purpose, to the dear audience, on purpose, we avoided the AI angle. Tons of other panels.
Sorry, I got it in at the last.
You got it in there. Yes, and please keep telling the story. This is where all of you can help us. And I would also like to invite you to thank my wonderful panel for these great insights. Thank you, guys.
Thank you. Thank you.